Recording. Hi, Gina. Hi, Denise. Hi, Lindsay. Recording in progress. Hi, Piaf. Hi, Pan. Hi, Tylonda. All of my net regulars, you know the routine. Please introduce yourself and your business in the chat. Share any social media links you may have. Alex, I promoted you to panelist.
Says screen is disabled right now. Can you make me?
Hold on. Thank you, Denise.
There we
go. What's the meeting code? 573. All right. Please keep on introducing yourselves in the chat. What is your business idea, Tylonda? I'm sorry, I should be starting this. Okay, hold on. Welcome everyone, and thank you for joining us for this week's Small Business Essential webinar. Today, we are talking about the essentials, financial essentials for the new year. My name is TJ Daniels, and I am the director of the Women's Business Center. The Iowa's Women's Business Center is funded in part through a cooperative agreement with the U.S. Small Business Administration. You will receive an email after this event from my colleague, Sierra, thanking you for attending today's session, information on how to connect to our speaker, as well as a form to complete. Please do us a big favor and take some time to fill this form out. This information allows us to continue providing free educational programming for small business owners in Iowa. Now, go ahead and take some time out to locate the chat function on your Zoom screens so you could join the conversation by asking questions or adding comments. And of course, don't forget to introduce yourself in the chat. Today's featured guest is Alex Polzin, the Director of Finance and Administration at the Iowa Center. Of course, many of you have worked with him already, so you may be familiar with Alex. Alex is responsible for the Iowa Center's accounting and governmental reporting. Alex also helps with the lending and education programs provided by the Iowa Center. Is that you doing that, Alex?
That's me.
Okay, so here's Alex. Thank you all so much for doing this webinar today.
All right, we'll go ahead and get started. As TJ said, I'm Alex Polzin. I'm Director of Finance and Administration here at the Iowa Center. I am a CPA with fairly diverse background. Before coming on board as the Director of Finance here at the Iowa Center, I spent several tax seasons in Iowa CPA firms doing small business tax, accounting, QuickBooks work, payroll work, things of that nature. And before that, I did a lot of general accounting, so for corporations. So that would be your kind of your nitty gritty bookkeeping, data entry into the general ledger, things like that. So I love to come on and have this conversation with our clients. TJ lets me come on about once or twice a year, generally around tax time or the end of the year, to kind of talk through some of the priorities, some of the things that you need to start thinking about. And we'll go through several checklists, several to-dos, task lists, so to speak, of what you should be thinking about here to make sure that you're in compliance with the state of Iowa, make sure you're in compliance with the IRS, getting all the taxes filed, making sure your bookkeeping's in good shape, making sure all your payroll's done. We're going to talk about all that today. This will be a very heavy year-end focused presentation. And so on that note, here at the Iowa Center, our mission is to empower Iowans with the potential to succeed as they pursue opportunities for financial success. We do that through providing educational opportunities, capital opportunities, and networking opportunities, both amongst our clients and with our professional network that we develop here at the Iowa Center. Here today, I want to get started off just with a setup and business registration slide. So this is something that I usually cover in almost every presentation, doesn't matter what topic it is here at the Iowa Center. I really think that's important to take a step back every year. January is a great time of year to do that and make sure, hey, am I set up in Iowa correctly? Have I registered to do business in the state? Am I in good standing? All of those questions, this time of year is a great time to do it. And so if you have not already registered to do business in Iowa, I noticed that there's a couple of people that have not started a business yet. Some of the first things that you'll want to consider is, okay, well, what do I want to be? Am I a sole proprietor? Am I the only owner of the business? If not, who are my business partners? Should I be a limited liability company? Big buzzword in the state of Iowa, very common professional business classification. It provides that protection, exactly what it says in the name. It's a limited liability protection. And there's a brief here that I have included for you all to read through in your own time, but it basically goes through in detail the Iowa code section that dictates LLC formation and what you need to do to file an LLC. So if that's something that you're interested in, we can absolutely help you out with that here at the Iowa Center. We have various guidance that we can provide to help facilitate you potentially try to do that on your own or get you set up with a professional that can help you get a limited liability document submitted to form your limited liability company. If you are just a sole proprietor, you're not interested in being an LLC, that's totally fine. That's very, very common. You just need to make sure that you're registered to do business in your county. I have included the Polk County recorder's office where you would do that if your business was located in, say, Des Moines. After you are registered to do business in Iowa, either as a sole proprietor or as an LLC or as a corporation or as some other professional classification that you may desire, you want to get an EIN with the IRS. Now, I've provided a link here. An EIN with the IRS is basically the social security number of your business. That's basically how I like to explain it. It is the number that you will use to identify your business in almost all of your future compliance filings, whether that's with the IRS, Iowa Department of Revenue, Iowa Unemployment. It's required to open a business bank account even. So it's very, very important identifying number for your business. Okay, let's go ahead and move forward. Now let's assume that you're in compliance. Yep, go ahead, TJ, what's up?
Just really quick, for some of those people that are still trying to set up their business, I just want to put a quick reminder out there that it does not cost you to set up your business. It costs $50 with the Secretary of State to file that LLC. Otherwise, all the rest of it is free. The LLC, not the LLC, but you could prepare your own documentation and file it. The filing fee is $50, and to do the EIN number, it's free. A lot of times when you go to the internet and you try to do that, and if there's a fee at the end that's more than $50, click back out, because a lot of places will help you do this for free, and we are one of those places.
Absolutely. Thank you, TJ. Yes, there are absolutely templates available to help you potentially try fill out an articles of organization, which is required to become an LLC in the state of Iowa, as well as a couple other different documents and different checklists you have to hit. If you have multiple owners, you will want to consider putting together an operating agreement in addition to maybe an articles of organization or articles of incorporation. Those are all kind of similar organizational documents. An operating agreement is for multi-member companies that need to spell out the rules of ownership. What percentage of ownership do I get, and for what? What did I put into the business to take ownership of the business, so to speak? How do I get money out of the business? How do we put money into the business? All of that stuff is dictated by an operating agreement, and that's the legal document of your business. As we move forward here, I believe my screen is still sharing. Let me know if it's not. But I've put together a checklist here of some documents that you are going to want to be thinking about from a financial statement perspective for your year end. So when we get to January, we're looking back at 2022. So we're looking at all those transactions from January 1st, 2022 through December 31st, 2022. And we need to identify all revenue, expense, asset acquisitions, debt payoffs, debt payments to me, loan proceeds, any of that sort of stuff, we need to capture. And what I mean by that is we just need to record all of our business transactions. And so I'll have a separate checklist and explanation and even a demo of how to do that. But for now, just know that there's a lot of legwork this time of year to get an accurate set of books so that you can come up with this checklist right here for your tax accountant to actually go ahead and file your taxes. Because as we know, taxes are right around the corner. As small business owners, you have revenue and expenses to report to the IRS, to the state of Iowa, and you want those to be as up to date and accurate as you can to make sure that you are paying the correct amount of taxes at the end of the day, to make sure that you know how you did from a net income profitability standpoint so you can make decisions going into the new year. All of those things are really important to get done sooner rather than later. One pitfall that I see with small business owners is, I'm busy in January. It's the new year. I'm starting new product lines. I'm starting new services, whatever. I'll deal with this later. Oh, there's this extension thing I can get on my tax return. I'll do it in August, September. I really encourage you guys to not fall for that kicking the can down the road schedule for your bookkeeping and your compliance for your business, just because it gets so much more difficult to do this as time goes by. It's so much easier to do it in the moment when these transactions are fresh, the activity's fresh, you remember what happened. It's much easier to get an accurate set of books right now. So as we go down this list, you'll see, okay, I've listed profit and loss statement for 2022. That could be anything from an income statement out of QuickBooks to an Excel spreadsheet that you've put together with your profit and loss. We've even seen it handwritten where somebody has totaled up all of their revenue and all of their expenses for the year and created that schedule of revenue and expenses, because really at the end of the day, we're trying to get to that net income number. Out of all the business revenue you took in for the year, and then you take out all the business deductions, all the money you spent to incur that revenue or to get that revenue, what is left? And that is the number that we are going to focus on as your net income number, the number that tells you, were you profitable? Did you operate at a loss? Do you owe taxes? Do you get a loss on your tax return because maybe you did operate at a loss this year? It happens. Those are all things that the profit and loss is going to tell you. The balance sheet is really, really important. I think just from a management standpoint, as a small business owner, it's going to tell you at a given point in time, what are my balances? So if I have a business bank account, December 31st, 2022 balance sheet is going to show me that bank balance as of that date. It's going to show me what's the amount of fixed assets I have. Maybe I have a ton of equipment in my business. It's going to show me the cost of that on my books. Maybe I have a PPP loan or an EIDL loan or some other commercial business loan. Maybe I have payroll liabilities I haven't paid out yet. All that debt is going to be shown on your balance sheet. It's really, really important to know where you stand in that sense, because if you have loan payments coming due, if you haven't made your payroll tax payments, for example, those are all really, really important things that your balance sheet's going to show you. It's not necessarily required depending on what type of taxation your business is, whether it's a sole proprietor, whether it's a partnership, what have you. Some of those returns require balance sheet, some don't, but it's in your best interest to try to understand it and prepare one, regardless of if you need it for tax purposes. Because again, it's going to tell you a lot of really good information. So once you get all that stuff put together, you're also going to need to provide potentially, you're going to need it to prepare it first of all. But then if you go to a tax accountant and say, hey, here's my P&L, here's my balance sheet, I'm ready to do my taxes for the year, most tax accountants are going to say, okay, that's great, but I need a little bit of supporting documents, because we all know you as a small business owner, you need to be able to support the transactions that build that consolidated profit and loss statement for the year. Every transaction, piece of revenue, every expense item that you're including in that schedule, there should be a receipt somewhere for that, or there should be a line item on a business bank account somewhere, that in the event of an audit, in the event that the IRS comes and says, hey, business owner, prove that expense, prove that you could take that deduction. Well, you, after doing a little work, could go through your shoebox or go through your folder or go through wherever your receipt is, and provide that to the IRS, or provide that bank statement that shows that line item to support your transactions. That is on you as the small business owner to have that stuff readily available. Your tax accountant will generally take your word for most of it, knowing that you're diligent, you're doing what you got to do. They trust you, but they are going to ask you for some support. They're going to want to at least see that year-end business bank statement. They're going to see December 31st, 2022, whatever, Wells Fargo account or whatever it is. What's that balance? They're going to want to see that number on your balance sheet. We'll talk about that here in a second. Same thing for loan balances. Same thing for uh, payroll liabilities. If you've got an amount due at December 31st, 2022 to the Iowa Department of Revenue for sales tax, let's say, or for Iowa withholding for your employees, you'll see that amount listed as a liability on your balance sheet. That's why you do it. Quick note on record keeping as you go through this. Keep all of your records for at least 7 years. Okay. That would be your receipts or your bank statements, something that supports the transaction with a little bit of description, a date, and an amount. Keep that handy. The IRS has 3 years to audit your business. And then if they, suspect fraud or something like that, then we can go ahead and, oh, am I cracking in and out a little bit? Yep. Okay. Go ahead and get this in. Sorry about that. Been kind of cracking in and out a little bit, so we'll get hopefully hooked up here, get a little bit better solid connection. Um, and so just a quick note on record retention. Again, your business can be audited up to 3 years in the past. If there is fraud, that number goes to 7 to 10 years. So they can go back further than that 3 year kind of basic number. So the general rule of thumb is keep your supporting documents for your business at least 7 years. Now, that could be as disorganized as a bunch of paper receipts in a shoebox. That can be a headache. The more organization you do on the front end, the better. One thing that TJ and I often talk about, if you are in the process of making a lot of purchases through your business email address, have a folder in your Outlook or in your Gmail where every time you get a receipt for a business expense, you're dumping that receipt right into that folder, and it's just business expense receipts. And that's it. That's all you got to do, because then down the road, you know that those are going to tie to your bookkeeping. You're going to have a financial statement. You're going to have a business bank account. And then you're even going to have that receipt in that folder that you could do a quick Google search in your inbox and pull it up, Amazon, January 20th, 2022, and get it pulled up, provide it to the IRS if they need it. You're good. So that would be one just simple way to do it. Others have a folder in their desk. They're just dropping them in there every time. The main thing is you want to be doing it in the moment. You want to make sure that you are, I incurred an expense. Just pop it on there. Get into a really good habit of doing that. You're going to want to look at your business credit card statements at the end of the year. You're going to want to come up with a schedule of what you personally contributed into the business from a cash perspective. Did I take any personal money out of my personal bank account and transfer it over to the business, for example, to support operations? Totally fine. We just need to track it. Same thing for distributions. Did I take any money out of the business? I was profitable, had a good year. End of the year, I want to go on vacation. I took some money out. That's okay. We just got to track it. Okay, list any changes of business ownership. Did I take on a business partner? Did I sell a piece of my business? Let us know about that. Did I incur any expenses greater than $2,500 for tangible equipment, tangible property? If I was a t-shirt manufacturer, did I get t-shirt presses that were $5,000 a piece? If I was in a delivery, did I get a vehicle that was, you know, very expensive. That's stuff we need to treat a little bit differently on our books. You just want to track it again. Looks like TJ's on here. Maybe has a question for us.
Okay, so I just want to remind everybody, if you've been one of my clients, one of the things that I always say, if you stay ready, you don't have to get ready. A lot of the times as small business owners, you may need to apply for a loan, or you may need to buy a vehicle, or you may need to do something. So try to always have those financial statements ready and available, even if it's just saving the passwords on your phone, so you don't have to, try to find the password, or, a lot of these things are, online nowadays, so they should be readily accessible. But if it's your Excel spreadsheet that you have to do, try to set a time once a month, like a Sunday, once a month for a couple of hours, so you could update all this stuff. So that's just a brief reminder, if you stay ready, you don't have to get ready.
Absolutely. I couldn't agree more with that. If you can carve out a Saturday or, an evening once a month to just knock this stuff out, you are going to thank yourself later. And so will your tax accountants. So will your tax preparation bill later on. The cleaner you're doing this yourself, it will even give you a little bit of a financial return generally down the road. But at the end of the day, you want to know where you're at so you can make good decision making process. So I want to take a step back. The why is always sometimes forgotten, or sometimes I skip by that. There's a couple points I want to make. First, if there's something that I go through here, I'm going pretty quick through everything to think about for year end, right? So if there's something that sticks in your mind, or that's a red flag, or oh, bulb goes off and you want more information, give us a call here at the Iowa Center. This presentation is meant to give you as much information as we can, so that you can identify where your needs are at. You can have that base fundamental understanding, and then reach back out to us, or reach back out to your tax accountant that you work with regularly, and follow through on the additional explanation you need, or the additional help that you require to get this stuff done right. I want to take a couple notes about bookkeeping here, and then I'm going to show you a little bit of a demo, kind of talk through what bookkeeping really looks like in my mind. So first thing I think about in bookkeeping is have I recorded all of my transactions? It's kind of how I let off. For 2022, we need every business transaction, whether it's a revenue item, money in, that I earned from sales of a product or service, whether that is an expense out the door. Maybe it's utilities for my office. Maybe it's materials costs on my product. Maybe it's software. There's a lot of different expenses that you can deduct against that revenue to come down to that taxable income number. There would be, obviously potentially fixed asset acquisitions that we talked about. There may be loan proceeds if you worked with a bank to get a business loan. There may be loan payments. All of those things need to be captured. So are my business transactions recorded for the year? We'll talk about that here in just a second. Once they are recorded for the year, have I reconciled my bank account? If I look at my balance sheet at the end of the year, December 31st, 2021, and I see the same number that's on my bank statement for December 31st, 2020. Well, I think I said 2021, but I meant 2022. If your balance sheet matches your bank, odds are you've at least captured all the transactions. You at least, when you go to your bookkeeping, whether that's a piece of notebook paper, whether it's an Excel file that we're going to go through here in a minute, or whether that's QuickBooks, that number, when it matches, that gives you good feelings, because, okay, at least I have captured all of the cash movement out of and into my business bank account. Hugely important. You can go for, as long as you got it all, then you can work through it. You can call the Iowa Center. You can give me a call. You can give your tax accountant a call and work through the questions you have. But you need to capture all of those transactions. Have I captured any of those other weird transactions that aren't through my business bank account? Things like, I took $1,000 out of my personal account and I went and bought office supplies with it. Or, oh crap, I was online at Amazon buying office equipment. I accidentally used my personal card and not my business card. Hey, it happens. It's okay. The IRS loves to see you not commingle your funds and keep that personal and business completely separated, but life happens. And as long as you are recording it accurately and communicating that with your accountant, it'll be taken care of just fine. Nothing wrong with that. Nothing illegal about that. Totally fine. Did I calculate my business miles driven? Easily forgotten about. If you are traveling anywhere else for business other than from your home to your permanent place of business, so like your office, that doesn't count, but anything else does. So if you are traveling up to Minnesota for a trade show, or if you are going to meet a client for coffee, or you are there in the middle of the day, you got to get out, you got to run to Office Depot and get some supplies. Track those miles. In 2022, you got 58.5 cents per business mile for the first half of the year. They cranked that up to 62.5 cents per mile at the end of the for the second half of 2022 for inflation. And then in 2023, that's up to 65.5 cents per business mile. It's going to add up pretty darn quick if you do a lot of driving for your business. If I am in the business of having inventory, like if I sell t-shirts or if I sell a product, odds are you may have inventory. You may have products ready to sell on hand, or you may have a lot of materials on hand that you are going to use to build the product at a later date and sell it. Count that inventory. Figure out how many units of whatever it is, material you have, how much did that cost you, and that is your inventory. That number goes on your balance sheet to track as, okay, I have this asset, I own this inventory. If I were to just go out of business today, I could sell this for funds. I could try to get rid of this for some money, and I know what that cost is. It's important because you'll be able to get an accurate cost of goods sold there. Have I reconciled my business liabilities? Again, credit card statements, commercial loans from banks, payroll liabilities to the Iowa Department of Withholding or to the feds. Have I paid, my payroll taxes? Just talked about that. Do I have a home office? Do I have a area of my house or my apartment or my garage that is exclusively used for business, that I'm using that area 100% for business? If I do, I may have some additional deductions that I want to think about. And then, did I record my owner distributions properly? We're all in this to make a profit. We all want to make money. At the end of the year, if you're profitable, you have a right as a small business owner to take some of that money out of your business. Keep track of it. Let us know how much money you took out of there. So let's take a look and see what this looks like in practice, because I can talk and talk and talk, but that doesn't really do us a ton of good. So I want to show you a couple things here. Can get the right page showed up. And just quickly, let's take a quick step back, but throughout this process, you will see a couple things in here. Iowa Sales and Use Tax Guide. If you have a question about whether or not whether or not your service or product is taxable for the state of Iowa sales tax, come to this website that I've linked here in the slides. It has a sales and use tax general list, and then you can actually go down. There is a taxable or exempt list of everything that you can think of, whether or not it's taxable in the state of Iowa. Please take a look at that. I've linked GovConnect Iowa. This is where you go to actually register for a sales tax account in Iowa or an Iowa withholding account if you do payroll. This is where you will log on and file and pay those taxes. I've also linked Iowa Workforce Development. If you have payroll, if you have employees, you have to pay Iowa unemployment insurance. This is the website that you do that. And then last but not least, I did link the EFTPS website. If you are paying your own federal payroll taxes, which is very uncommon, this is the website that you do that at. Okay, let's get back to where we were. So I tend to like to use this template that we work with our clients here at the Iowa Center a lot with. Basically, this is our bank transactions. This is our bookkeeping, bank reconciliation, financial statement template all in one. We spend a lot of time going through this with clients, and it seems to be a really good tool that people can use. So it's all blank right now, but basically what you're looking at is a 3-tab process. You have a tab here called bank transactions. This is where you're going to list all of your bank transactions. So this is what I talked about when you were capturing all of your business records or recording all of your business transactions. You're going to start with your business bank account. That's obviously, hopefully diligent about that, consolidated in there, capture as many business transactions out of your business account as possible. You'll do that just by downloading the business bank statement online. Almost all banks right now provide an online portal for their customers. You can log on, you can see your balance, you can see your statements, you can print them off, save them. But in fact, something that's almost a little bit even easier that I've found works well for clients, a lot of people will just pull that app up on their phone. Oh yeah, I've got my business bank account right here on my Wells Fargo app. Perfect. And they'll have that phone up right next to them, as they're filling out this business transaction spreadsheet. And I'll show you kind of how that works in a second. There's a blank balance sheet here and a blank profit and loss. So I just kind of showed this as what it looks like to get started. Now, if you were going to do your bookkeeping for the whole year, it's going to look something like this. Let's take a second just to look and see what's going on here. So I've got a bank reconciliation, bank tracking spreadsheet put together here. I've got it from January 1st, 2022 to December 31st, 2022, January through December. We've got deposits and withdrawals. So in this spreadsheet, we are simply looking at cash in, cash out of the business bank account. So I've gone through and I have printed out all of my business bank accounts for the year. So I'm that guy that waited till the end of the year because I just don't like doing bookkeeping. I don't like doing this stuff. And I'm just going to put it off till January and do it all at once. And that's fine, but it's a lot of work. You got to get all of your bank transactions either printed off or saved to your computer. You got to get your phone app pulled up for all your transactions from January through December for the year. And you start listing them in the spreadsheet. It's the same thing as listing them on a piece of paper and totaling them up at the end of the year. It's the same thing as hand keying them into your QuickBooks Online account and having it generate you a profit and loss statement. You got to get the data in there somehow. It doesn't matter what type of system you're using. It's only as good as the data that you put in, only as good as the inputs. And so here we've gone through and we have literally pulled every transaction off of my year's worth of business statements and dropped them into the spreadsheet. So I did it by hand just because that's how I like to do it. I like to look at every single transaction one by one and drop them in there and tell my spreadsheet what it is. If you're savvy with Excel, you have multiple ways to do it. A lot of these bank statements will let you download an Excel file with the transactions for a given period of time, and it'll do half of this work for you. And you just copy and paste in here and go the rest of the way. If you are in QuickBooks, for example, you may not even have to hand key all your bank transactions in. You may have something that links to your bank account and you're just pressing a button. Hey, import all my transactions. Then they're in the QuickBooks account software. You just have to go in and tell the software what it is. Is it an expense? Is it a revenue item? Is it an asset? Is it a liability? All that stuff. So this is the basic meat and potatoes of capturing all data, all bank transactions for the year. So in this example, which is just a made up example, I've gone through and I have identified numerous transactions. You say we start at January 2022, and we've got several months all the way down through December 31st, 2022. We've got all of our deposits for the year. We've got all of our withdrawals for the year. We're saying that this is the very first year of business. So I'm saying that on January 1st, 2022, my beginning bank balance was zero. Now, if you started business in 2021, you're going to have a beginning balance there. Just type it in. Take it right off your tax return from 2021, or take it right off of your bank balance on that app or on that January 2022 bank statement. Take that beginning balance, pop it right in there. First year, I started January 1st, 2022. In this example, my beginning balance is zero. Okay. The deposits and withdrawals, well, that's pretty easy. I got all the deposits here in my business bank account totaling $92,250. I've got all the withdrawals out of the account totaling $83,815. So in a very basic example, I've got zero to start plus $92,250 minus $83,815. I should have an ending bank balance December 31st, 2022 of $8,435. So by capturing all of the transactions and listing them in this format, at least know what my ending bank balance should be and how I got there. Here are my deposits, here are my withdrawals. Okay. As we go through here, the most important part of this business tracking, business transaction tracking, is that you identify, okay, who did the transaction come from or go to? Because we're talking about deposits or withdrawals. What type was it? You know, some people think this is necessary. Was it a check? Was it an electronic payment? Was it an ACH? How'd it come? And then, you know, what do I think it is? As the small business owner, what do I think it was? And this is something where you will use pretty much this generic set of lists here to identify what the stuff is. In this case, I started my business out with a $6,000 contribution. I started it out with a $10,000 loan proceeds from the SBA, And then in my first month, I did $2,500 worth of sales. And then if we look over here, I've got some withdrawals. I've got, okay, it looks like I had some returns, a little bit of materials here. This is a t-shirt company example. So I have materials, cost my sales, and then I had expenses to vendors. I had to pay rent. I had to pay various expenses. You will have in your bank transactions or in your notebook or in your QuickBooks, you will have these expenses for vendors broken into every single line item, every single individual transaction. For the sake of speed and example, I lumped all of these together. But if we want to take a look at what this looks like then from a profit and loss standpoint for just the month of January, let's just take a look and see what that looks like. So I've got a couple things here. Owner contributions. Owner contributions right away, I would think, okay, well, that's deposit, that's sales, right? No, it's not. Money that you personally contribute into the business is an owner contribution to equity. It is not sales revenue. It does not belong on your P&L. Loan proceeds, same thing. SBA loan to get started. $10,000 hit my bank account as a deposit. That is not revenue. You did not do anything to earn that by selling a trade or service or product. It's a loan. So we put that on the balance sheet. It doesn't belong on the P&L. All of a sudden now, okay, wait a minute. Through the rest of the month, I do see some sales revenue. I made some t-shirt sales, $2,500. So we're going to record that as sales revenue. And then we've got some expenses that were incurred to make that revenue. I don't see anything weird there. I don't see like an owner distribution. I didn't write a check to myself in January. I don't see any loan payments made in January. So I'm pretty comfortable. So if I go over here to the profit and loss in January, and we look at the January column here, well, we should start to identify a couple things. $2,500. Well, where'd we get that from? Right there, $2,500. We just dropped that right in for sales. And then we just start going down the list. I've got more January transactions, looks like $30 of expense, pop back over $30 of expense. I had $150 of cost of goods sold. And then I've broken out for you what the rest of these expenses may look like given your situation. And the rest of those will total up to the 4,225 expense that I've got right here, 4,215, excuse me. You might ask, okay, well, that kind of makes sense. I got my revenue, I've got my expense. Most of these pulled right off of the bank transactions tab. I've got a net income number here that's showing me a loss for the first month. Makes sense. First month of operations, it's hard to make a profit in the first year, let alone the first month. You're starting to see the end goal populate with a loss there. Now, there's a couple items in here that aren't on the bank statement. We see depreciation there. We see auto there. We'll talk about that here in a second. But at the end of the day, you're starting to build your net income for the year. Revenue minus expenses, net income. That's what we're trying to get to. Now, you may ask, well, what about this 6,000 owner contribution? What about this? What about this? What about this loans proceeds? Okay, yep. You'll notice up here, that is not included in sales. I do not see $16,000 of additional cash in being recorded as taxable sales revenue. I just see that over here on the balance sheet. This is where your assets, liabilities, and equity are recorded. So profit and loss, revenue and expenses over a period of time, in this case, January through December, is going to get us a full year revenue minus expenses net income. This is what we pay taxes on over here. Balance sheet, just a snapshot in time. As of the end of the year, what was my bank balance? What was the cost of my inventory? What was the cost of my fixed assets? What are my loan balances? That's what we're talking about over here. So if we take a step back and we say, okay, 0 beginning balance, deposits, withdrawals, 8,435 ending balance. That all looks good. I should go to my December 31st, 2022 balance sheet and see a bank balance of 8,435. Awesome. I've got it. It's right there. No problem at all. Now, where did this other stuff come from? How did I get to the rest of this? Well, if I look at my bank transactions for the year, I've got $10,000 of SBA proceeds. So right off the bat, I know that, okay, those proceeds are already captured here in my 8,435. right? And I know I started down here then with a $10,000 loan. So at January 31st, I would have seen a notes payable there of 10,000. Bank transaction, there's my $10,000 loan deposit. I've got my loan right there, notes payable on my books, and I do not see anything up there in sales. There's nothing to worry about up there. Okay. As we go forward, you'll see a couple things here. So if I go forward and I want to illustrate a couple things. So $6,000 owner contribution, same story. The owner, that's my personal money I put in the business. It's not sales. I don't have to pay taxes on that. That is an owner contribution. It goes down here. So to start the year at the end of January, we'd see $6,000 owner contribution down there as a positive number in your equity. You increased your equity by putting money into the business. So let's look at a couple things. I think it's pretty straightforward. Sales and expenses. Sales and expenses all the way across. You'll do that for every month. You'll have your sales. You'll have your returns. You'll have your your other revenue. So that's one thing you'll want to look at. I've got a couple other revenue items here. So like in this example, we've got your normal t-shirt sales in April, for example, of 8,000, and then we did some consulting work for 300. So if you look over here in April, you'll see the 8,000 sales revenue there, the 300 there, and you'll just start filling out the spreadsheet based on the bank transactions that you have. That's pretty straightforward. What's not straightforward is the business activity that is not reflected in these numbers right here, or that is reflected in these numbers but does not hit your profit and loss statement. So let me try to cherry pick a couple of those out of here.
And while he's searching for this, I just want to break in really, really quick, because I know this is where a lot of small business owners make the error. The money that you're paying yourself or the money that you're putting into your business, this does not go into your profit and loss statement. I'll say it one more time. The money that you are putting into your business, it does not go on to the profit and loss statement. It goes onto the balance sheet. If you put the money that you're paying into your business on the profit and loss statement, it's going to look like you have additional revenue, or it's going to be taxable again. So do not make the mistake almost everybody makes. I know you're trying to show that you've put money into it, but that into your business, but that goes on to the balance sheet.
And I would just add to that, TJ, that you may feel the desire to show more income. Like maybe you're doing a loan application, or maybe you're doing a grant application. It's like, you feel this pull to show more revenue so that you can show that you're a profitable business. Take a step back and think about what that means. If you are profitable, which is the goal, and eventually, inevitably, you will be, hopefully, and you'll pay, but you have to pay taxes on that money, regardless of if you take it home with you or not. You are paying taxes on this profit and loss net income number, for the whole year. In this example, it's going to come out to $6,195. It totals all the revenue, all the expenses. You get to that number and you pay taxes on $6,595. So you don't want to accidentally put an extra $10,000 up here in revenue that you got for loan proceeds, or that you sent yourself for just to fund the business, because all of a sudden you're going to be paying taxes on $16,595, not $6,595, and that's easy math. You're going to be spending an extra $3,000 on taxes just by making that small little mistake. So it's really, really important that you just do it accurately and let the chips fall where they will, and then you use that information to make business decisions going forward. So if your income was a little higher than you thought it would be, maybe you want to start growing your business and investing more in more employees or other product lines. Maybe your income wasn't as high as you thought it would be, and you need to find ways to generate more revenue, or you maybe need to start looking at getting a loan from a bank to keep your operations going, those sort of things. But that number is going to be what it is, and you should just take it for what it's worth and make decisions based off that. Pay the accurate tax and move forward. But exactly like TJ's saying, you definitely do not want to inflate that revenue with non-revenue items because you're going to pay for it in tax. It's going to hit your bottom line and it's going to hurt. And so that's a really, really good, call out there. So let me just show you a couple things. So let's say you got a loan payment.
Hold on, wait.
So yeah.
It's a quick one. If you're in an industry that has to pay for sales tax, will that be a line item with your profit and loss statement, or is it accounted somewhere else? I was trying to.
Great idea. Okay, perfect. So you have a couple options there. What most people will do there is they will track any cash that they have over here. I called it accounts payable, but this could easily be called sales tax payable right there. And so you have a couple options there. You've got an invoice, right? So you are going to be over here on your bank transactions. Let's clear this out for a second. And let's say you've got a sales proceeds here of $2,500. Okay. Now, depending on how you've done this and what your business is required to do in sales tax, this number right here very well may include sales proceeds that you have collected from the customer. You've got your price, you add on the 6% plus the 1% local for an extra 7% sales tax, and you are collecting the sales price plus the sales tax from the customer. Okay. And that shows up as a full deposit over here on your business. If that is the way you are doing it, and you come over here and you have sales tax that you've collected in that sales revenue number up there, then absolutely you will deduct for taxes a sales tax expense number. You will have somewhere down here something that's called like a sales tax expense, and you will deduct that as an expense. Some people, some accountants, depending on how you do your books, they will not include that sales tax in this sales number. It will not be included in this deposit. It'll be separately stated. In that case, you don't have to. You only get to deduct the sales tax if the amount you collected is up here in this revenue number. So it just shakes out whatever's easiest for you. I would say if it's depending on the way that your transactions are going, if you are just seeing lump deposits like this in your bank account for sales and it includes sales tax, then by all means go ahead and include the payment of those sales tax as an expense on your profit and loss. It's a really good question. Okay, let's do loan payments real quick. One or two other examples. I want to make sure we have time for more questions. So loan payment, withdrawal. Okay, right away. This is like the flip side of some of the examples we were talking about with loan proceeds or with owner contributions. So you have a loan payment. Okay. So earlier on in the year, we got a notes payable right here of $10,000. And so we know we took out a loan of 10,000. We had 10,000 hit up here. We had 10,000 hit up here, and we know that, we've at least made that transaction. So how do we record the loan payment? Okay. So a loan payment is not an expense for the principal portion. It is for the interest. So in the sake of this example, we said $2,000 of loan payments were made at the end of the year for all the loan payments. That's usually not how it works, but in this example, it is. We broke out interest expense to be $120 for the year. So if we go back to our balance sheet, then you'll see a couple of things happen here. So on the notes payable balance, if we paid, we'll go ahead and just calculate it out. If we paid $2,000 and 120 of that was interest, well, 1,880 was principal. So we reduced this balance on our balance sheet by 1,880. And we know then at December 31st, 2022, our loan statement that we print out from the bank or from SBA or whoever that loan's from or with, their balance should say 8,120. If it doesn't, you have an adjustment to make. Maybe you accidentally put this on here as 8,000. You just put the whole 2,000 in here to notes payable. Close, but not quite. Close, but not quite, because you've got, oops. Close, but you didn't record your interest. You have $120 worth of interest expense for the year that you do get to deduct. Okay. So loan payments are a little tricky. within that one payment that you see hit your withdrawal on your bank, you'll have to break it up. Okay. The other thing here that I want to show you is something like an owner distribution. So down here, as we are going through, oops. We go through this whole year, uh-oh. Looks like I got my things a little messed up here. Here it is. Okay. So as we got to the very end of the year, I'm tracking my cash balance, and as the owner, I go, well, I want to take some money out. I had a really good year. I was profitable at least 6,595. Had some other cash in there, and I put some money in myself, all that stuff. I want to take some of that out of there. So I took $10,000 out of my business bank account. I wrote a check to myself, or I went to the ATM, took that cash, and went home with it. Again, owner distribution. That is not an expense unless you are paying yourself a salary, meaning you have filed your W-2s and you have paid Social Security and Medicare taxes on those wages, and you have filed with the Iowa Department of Revenue, and you have filed your federal unemployment, your federal Social Security, Medicare. Unless you have done all that, it is an owner distribution, and you do not deduct that. It is a tax-free distribution. You are paying taxes on this net income number, 6,595. You are not including loan proceeds and revenue. You are not including money that you put into the business personally, and you are not including money that you took out of the business personally, unless you have done it by paying yourself an official salary reported to the IRS. Instead of recording it as an expense, it goes right here on your equity as a minus number to your equity, a $10,000 out. Okay. Last but not least, there's a couple other items I want to talk about that could affect equity or your expense that are not part of your bank statement. So a couple things that are not on this list that you could still deduct would be something like auto. Okay. I have business miles. I got to think of that. Business miles, how do I quantify that? I didn't get cash in my bank. No one paid me for using my personal vehicle for business. I don't have a deposit in my bank account to record it. So it's one of those owner contributed expenses. So in this case, I calculated all my miles up. I took 62.5 cents for the second half of the year. I took 58.5 cents for the first half of the year, and I got a value to deduct of $6,720 of auto expenses. Okay. It's on here. It's being deducted against my revenue. This net income number does get pulled to it's part of your equity. Current year net income is added to your equity. So I've seen that deducted here, but I did not see the cash go out of it. I didn't see the cash go out. So I'm still in balance here, or I'm out of balance, because at the end of the day, your assets have to equal your liabilities plus your equity. Or the way that I like to think about it, your equity, your net worth of the business, is your assets minus your liabilities. So if you went out of business today and you paid off all your debts, what's left? And in this case, that would be your equity. And so when I look at that, I've gone through this whole example and I'm like, oh crap, I'm out of balance 6,720. Well, why is that? Because I've got this auto expense that I've tacked on, $6,720 worth of additional expense, getting my net income to 6,595. I see that number there, but I have not recorded the other side of that. That number is a equity contribution. The amount of personal funds or personal asset use that you put into the business is an equity contribution. And so I bumped that up by 6,720, and now I am back in balance. And so again, you have to be really, really careful about not only does this go on my P&L or is this a balance sheet item, and then think back at the end, have I captured everything? What about that money that I spent out of my own, out of my under my bed that I took out and I spent on business expenses? Same thing. You record the expense on the P&L and you consider that an owner contribution. If you just put money into the business, well, you'll have to deposit here. Again, owner contribution down here. So that is a really, really important aspect of this. Before I run out of time, I want to make sure that we talk about a couple other items. If I can ever find my PowerPoint again. And here
Really
it is.
quick,
Yes.
Pan asked a question. I think it's when we was talking about the balance sheet. It said that would be true if you paid principal and taxed, right? If you paid only deferred interest, no principal, say in December, then your loan liability would not go down, right?
Exactly right. So if you are only paying deferred interest, it would all be expense on your P&L, and you would not see that loan balance go down on the balance sheet. That's exactly right. Exactly right. Okay, so let's breeze through this really quick and then get some more questions in. So that's the bookkeeping side of things. You got to go through that whole process, either you or the accountant that you pay to do it, or QuickBooks helping you out. Somebody's got to do it. Somebody has got to come up with that accurate P&L, with that net income number and that accurate balance sheet to make sure that you are not paying too much taxes or too little. Too much, you're putting yourself at a disadvantage. Too little, you're putting yourself at risk with the IRS for audit. So you want to make sure you're doing it right, and then you want to make sure you're able, and then of course you need to make good decisions, right? So as we move forward, then some other things to think about. I've done all my bookkeeping. I've got all of my bank balances. I've got all my loan balances. I've got everything tied out. I feel super good that I have a really accurate set of financials. Well, then what else do I do? Okay. Well, state of Iowa, make sure that you're in good standing with the Iowa Secretary of State. It's a very simple process. You go to Google, you go Iowa Secretary of State
I
Business.
actually received my notice from the Iowa Secretary of State to file my biennial filing.
Oh,
If
did
you
you?
do not, yes. So if you do not file that in time, your business will go inactive. So it's every other year. That's what biennial means. It's every other year. And I think it's $50 again to refile.
And I am just pulling up a known business here. This is my business
Yep.
actually,
And received
uh,
one over the weekend.
and so I am just pulling up my business to look and see, I just typed it into the business search. Okay, I'm incorporated in the state of Iowa. I'm effective. It looks like my status is active. Um, and then if I look down, it should tell me I'm in good standing somewhere. Yeah, legal, active, nothing.
Oh, so you
So
should have received your notice as well, Alex, to
I should have. And I think I did go on and do it. So up here, there's some quick links. If you do need to do it, online services, you go right here, you go business entity filings, and there's your biennial report filing right there. You would click on that, log in, and get it done. And so this is where you go just to make sure that your business is good with the Iowa Secretary of State. Do I need a biennial report? Exactly. So if somebody needs a certificate of good standing, there was a little link on there as well. I clicked out of the web page, but that is where you would go to get that. Iowa Department of Revenue. That is the GovConnect Iowa that I showed you earlier. That is where you go to file and pay sales tax, where you go to file and pay Iowa withholding. Iowa Workforce Development, file and pay your unemployment. So please use these as checklists. I do want you guys to receive this PowerPoint and print some of these slides off so that you can look through this for your own year-end compliance. Down here is your year-end checklist, and then we'll be done. If you do pay payroll, just know I didn't put on here, but you have a W-3, W-2 filing requirement. You have a 941 for federal withholding, Social Security, and Medicare, and you have a 940 for unemployment. Here are a couple looks at tax returns that I do want to just quickly show. No, because I cleared out of them, but please feel free. Uh, let's see here. Yep. Okay, so please feel free to click through these. I wanted to try to tie the P&L to each one of these tax returns for your business, but just know that the front page of whether or not you're a Schedule C for a sole proprietor or a 1065 for a multi-member LLC, yada, yada, that first page of the return is basically going to mirror that profit and loss. It's going to have you report the revenue and expenses. So if you're ever worried about what it should look like, go ahead and click on this link, go to your Schedule C. It'll pop up a nice little list of what you should expect to have to report. So this is what a Schedule C looks like for a sole proprietor. Just a single member LLC would file this return with their 1040. It's a section for business details. And then this should look very familiar. It's an income section with your gross receipts. It's got cost of goods sold on there. you've got an area for all of your different expenses. And then way down here on line 31, you have a net income line, which will flow to your 1040 and you'll pay taxes on it. So if you're kind of wondering, what expenses did Alex talk about? What stuff should I be trying to deduct? Pull this Schedule C up from this PDF and look through this. It'll help you. It'll help be your guide of what you need to be looking for. Last but not least, here is a deadline. Here's some deadlines coming up that you need to be aware of. If you are paying payroll and you are required to do your payroll filings, W3, W2 are coming up here due in about a week. Your 1099s are due in about a week. So that is for payments to non-employees greater than $600. So if you have contract labor, if you pay somebody just one-off here and there to help you, and you paid them more than $600, you got a 1099 filing requirement. Same story for your federal and your state payroll filings due at the end of the month. If we got any farmers on the call, you have your Schedule F, which is your revenue and expenses for a farm, due March 1st. And then March 15th is the due date for your 1065s and 1120Ss out there. Those are the tax returns. They're a lot like a Schedule C, except for much more beefy, more pages. They require a balance sheet. Those are for either your businesses that have elected to be taxed as an S Corp, or your multi-member LLCs that default are taxed as a 1065 partnership. Last but not least, you have April 18th as your individual tax return deadline. You have April 30th for Iowa. I believe it's May 1st actually this year. One quick note for all of you small business owners, and then I will stop talking and let you go, I promise. One common misconception is that we've heard in the past a lot is, I filed my individual taxes, but I haven't filed my business. That right there is that it's an incorrect statement, because you cannot accurately file your individual taxes without first filing your business, or at least having your business taxes prepared. If you're a Schedule C for a sole proprietor, that Schedule C that I just pulled up a little bit ago, that net income number gets slabbed onto your 1040, and that's what you pay taxes on. If you are an 1120S or if you are a 1065, you will get a Form K1, which almost is exactly like a Schedule C, and it'll show you your share of that revenue that you have to report on your taxes, and it'll slap that number right on your 1040 to pay taxes on. So just know, you cannot accurately complete your individual tax return without finishing your business reporting first. Whether it's a Schedule C, a 1065, or an 1120S, you got to get that done first. Then you can file your personal taxes. And on that note, I know we're over time, but I'd love to take any questions. You have my email there. Please reach out to me if you'd like to discuss any of this in more detail, or if you'd like to get a one-on-one scheduled, please reach out. We have many resources in addition to myself here at the Iowa Center that can help you work through any issues that you might need more help on with this. On that note, I'll send it back to TJ.
Okay, so just a reminder, I will send out a link to this recording. I will send out a copy of the PowerPoint presentation. And I think, Alex, we could send out a copy of the Excel spreadsheet that you.
Oh yeah, absolutely.
Okay.
For sure.
The one piece of information that you want everyone here today to know.
The one piece of information is, please, I know it's against probably every fiber in your body, but try to do this contemporaneously through the year for 2023. I know a lot of you might be sitting here going, oh crap, I got a lot of work to do for 2022. That's okay. But I would just suggest, fight through that urge to put it aside for the next year and start doing it monthly. Because if you can go through a bookkeeping process on a monthly basis, it's going to make all of this end of the year stuff just feel like a breeze. You're going to be like, oh, I've got my bank statement. I've got my loan statement. Hey, tax accountant, I'm ready to go. And they're going to love you, and your bill's going to be cheaper than it was the year before.
The hardest part is getting started. I mean, just try to get started. If it's above you, maybe spend a little bit of extra money to get a bookkeeper and help you through it. A lot of the clients in this call, they already know I've been audited. It's not fun. It's easier just to get started, get it done versus going through all of that mess. So thank you everyone so much for being here, engaging and asking questions. Be on the lookout for some of the classes that we have. Every Tuesday is Small Business Accountability. We have it online or here in the office in person. That is from 10:30 to noon. The first 30 minutes, we do networking and talking. And then for an hour, we put our heads down, set a goal and accomplish that goal within that hour. So sign up for that. On February 3rd, we have the story of Black business in Iowa with Terrence Thames from Coco Creative, Courtney Perry from Privacy LLC and Lady Lex Candles, and Lily O'Keefe from Cleaning for Hope. Lee Thai Delights will be bringing in some cinnamon rolls. So please come and join us for the story of on February 3rd. On March 2nd, we begin our next session of Dream Builder. That is our in-depth business planning class. We use Live Plan to do these business plans. We meet every week on Thursdays. The class is $250. I do have some scholarships for that. If you're interested, please feel free to contact me. And with that, oh yeah, okay, so I know I had a couple of questions about grants. If you're interested in some of the grants that are available, please sign up for our newsletter. We do share the grants that we know of every week in our newsletter. So please do that. And then online, we have a link for a directory that we're creating of all of our clients. So we could, we could start using each other services. So please make sure to enter your information so you could be in that directory. And with that, I'll end this webinar. Sorry, we ran a little bit late, but I'll leave you with my one piece of information I like to share all the time, and that is to do what you love and love what you do. Love what you do. Thank you, everyone, and have a great day.